Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Income tax hits 60% in ultimate stealth raid on your personal allowance. This has been described as the ultimate stealth tax trap, as it takes punitive amounts of money, but many don't realize they're paying it. The UK officially has 3 income tax bands. Basic rate income tax kicks in at earnings above £12,570 and is charged at 20%. Any earnings above £50,270 are taxed at the higher rate of 40%, while additional rate tax kicks in at 45% on earnings above £125,140 a year. All 3 will be frozen at today's level until 2028, and Chancellor Rachel Reeves might even extend that to 2030 in Wednesday's spring statement. As if that wasn't enough, National Insurance, NI, is charged on top. So where does that brutal 60% tax rate come from? That's a special levy, reserved for those earning between £100,000 and £125,140 a year. It was introduced by former Labour Chancellor Alastair Darling in April 2010 and reduces the personal allowance by £1 for every £2 earned over £100,000. Helen Morrissey, head of retirement analysis at Hargreaves Lansdown, said by the time earnings hit £125,140, the personal allowance will have been eroded altogether. The 60% tax trap is the ultimate stealth tax nibbling away at your income. Worse, that £100,000 threshold hasn't increased in 15 years, dragging more and more people into handing 60% of their income straight to HMRC. In practice, some people pay a higher marginal rate than 60%, as parents lose access to free childcare benefits, while graduates can repay student loans at rates up to 9% of their income a year. Don't miss. State pension age hike to 67 can't be justified as death's rise, axe it now, latest. Many won't have much sympathy given that £100,000 is a lot of money to earn each year. Yet the principle of taking 60% of people's earnings in income tax is pretty brutal. Especially given all the other taxes on top, such as NI, VAT, road tax, inheritance tax, capital gains tax, stamp duty, and all the rest. Some higher earners will wonder whether it's worth the effort when HMRC grabs so much. It's also yet another example of how fiscal drag is making people poorer, and with tax bans frozen, they'll lose more every year. Yet there are ways for higher earners to fight back. Boosting pension contributions can reduce your income for tax purposes and could drag some people back out of the 60% tax trap, Morrissey said. She takes the case of somebody earning £125,000 per year. Darling's tax trap will erode their personal allowance from £12,570 to just £70. In total, the income tax bill would be an eye-watering £42,432, with NI on top. If that taxpayer could afford a pension contribution of £25,000, this would cut their income down to £100,000, Morrissey said. They would avoid the 60% tax trap completely as their personal allowance is fully restored. This will have slashed their total income tax bill to just £27,432. That's a whopping £15,000 less than if they hadn't made the contribution. Don't miss state pension horror as Rachel Reeves drags incomes below minimum needed to live latest. ISA deadline is almost here. Shield your savings from Rachel Reeves' insight. Rachel Reeves could sneak in tax hikes next week without breaking her word, reveal. We use your sign-up to provide content in ways you've consented to and to improve our understanding of you. This may include adverts from us and third parties based on our understanding. You can unsubscribe at any time. Read our privacy policy. The taxpayer wins in the longer term too by boosting their retirement pot. In an added benefit, they can withdraw 25% of their pension free of tax, under today's rules at least. Under the annual allowance, everyone can contribute the equivalent of 100% of their salary to a pension, up to a maximum £60,000 a year. Morrissey said not everyone can afford to make such a large contribution, but even committing smaller amounts can cut tax today and boost pension tomorrow. A £10,000 contribution, for instance, would still save £6,000 income tax for someone in the same scenario. If your workplace operates a salary sacrifice scheme, you can also make savings on your NI bill too, Morrissey added. Just remember you cannot normally withdraw money from your pension until age 55, rising to 57 in 2028. So you need to be sure you can do without that income before paying it into the pension.